Welcome to SecedNowUSA.com. Our goal is to explain what is going on in the United States in easy to understand videos. This video deals with the Federal Reserve's role in bank bailouts.
Father, you remember my friend Brian? We have been discussing your concerns about the direction the United States is heading.
Ah, yes Brian. Nice to see you again.
Allison said that you had some information on the Federal Reserve. She said that, with your background in economics, that you could explain it better than she could.
Okay. The Federal Reserve is one of the least understood but most complicated organizations in our country. It might help to explain how and why the Federal Reserve was created. Most people believe that the Fed was created in order to stabilize the economy and to prevent bank failures. The truth is that the Fed was created as a government-sanctioned cartel to protect the large banks from their smaller competitors, and to pass their losses on to the taxpayers.
How is that possible? I was always told that the Federal Reserve was part of the federal government. If it's not part of the federal government, then who owns it?
That's part of the problem. No one really knows who the stockholders are. Congress is not even allowed to audit their books. Most economists believe that the Fed is owned by the largest banks or the ultra-rich people like the Rothschilds and the Rockefellers.
So Father, tell me again how the Fed came about.
It's a really long story. If you want the full history, I recommend that you read the book, The Creature from Jekyll Island, by G. Edward Griffin. Basically, the story goes like this. In the late 1890s and early 1900s, the large bankers were losing a lot of business to the smaller regional banks. And many of the corporations had been very profitable during the Gilded Age. They were using their profits to pay off the bank loans, which was hurting the big banks. In 1910, 6 people, representing 25% of the world's wealth, met on Jekyll Island in Georgia, to form a banking cartel, to protect their interests. However, they knew that cartels rarely last very long because some members get greedy and cheat. Therefore, they devised a scheme to get the federal government to sanction their cartel. Without going into all of the details, they convinced the government that their cartel was the only way to stabilize the banking system and prevent bank failures. The federal government bought the lies and passed the Federal Reserve Act in 1913. In the same year, the federal government passed the 16th Amendment to the Constitution, which authorized the federal government to collect income taxes for the first time. The collection of income taxes was critical to the bankers' scheme, because without a reliable source of revenues, the federal government would have no way of bailing out the banks or borrowing large sums of money, which generates profits for the federal.
But I was always told that the Fed helped stabilize the economy, helped to prevent bank failures and helped to grow the economy by controlling the money supply.
Oh, that's a good one. Sorry for laughing, but nothing could be further from the truth. During their 100-year history, the Fed has presided over the Great Depression, numerous recessions and the 2008 near collapse of the entire banking system. When the Fed expands the money supply and lowers interest rates, they contribute to growth in the economy, which always leads to financial bubbles. Then, when the Fed contracts the money supply and raises interest rates, they cause these bubbles to implode, which result in recessions and sometimes depressions. Between 1920 and 1929, the Fed's meddling with the money supply created 3 economic expansions, followed by 3 recessions. This culminated in the stock market crash in 1929, which was followed by the Great Depression. While the Fed didn't cause the depression, it certainly contributed to it. The Fed also presided over the recessions in 1953, 1957, 1969, 1975, 1981, and the Black Monday crash in 1987. Not to mention the savings and loan crisis in the late 1980s and the near meltdown of the entire financial system in 2008. Each time this happens, the Fed convinces Congress that the Fed just needs more power to control the economy, and Congress always goes along. This has allowed the Fed to gain more and more power and control over the United States. Over the 100 years that the Fed has been in existence, its power has grown dramatically.
But, Father, hasn't the Fed done a lot of good things? For example, haven't the rate of bank failures improved dramatically since the Fed was created?
Shortly after the Fed was created, there were massive bank failures during the Great Depression in the 1930s. Then, the Fed figured out a way to get Congress to bail out the banks using taxpayer money. So, technically, the Fed didn't directly bail the banks out, they just convinced Congress that bailing out the companies that the banks had made large loans to was good for the economy and would protect jobs. Congress bought these arguments, hook, line, and sinker. They never seemed to realize that what they were really doing was bailing out the banks for making back loans.
So what are some of the companies that Congress bailed out to protect the banks?
Well, starting in 1970, Congress bailed out Penn Central Railroad and Lockheed. In 1972, they bailed out the Commonwealth Bank of Detroit. In 1978, Congress bailed out Chrysler. Then, in 1980, they bailed out First Pennsylvania Bank. And, in 1984, Congress bailed out Continental Illinois Bank. In the latter 1980s, they bailed out most of the savings and loan industry. Then, in 2008, there was the bailout to end all bailouts. They bailed out Fannie Mae, Freddie Mac, AIG, American Express, GM Macy, General Motors and Chrysler, Citigroup, Goldman Sachs, Bank of America, and JP Morgan. And that doesn't include all of the companies, like Countrywide Credit, Washington Mutual, and Merrill Lynch that were indirectly bailed out through mergers with larger firms.
That's unbelievable. Wait, don't tell me there are more?
Yes. We haven't even touched on the government bailouts. In 1975, Congress bailed out New York City. Then, in 1980 the Fed convinced Congress to pass the Monetary Control Act. This allowed Congress to bail out foreign countries. It started with the bailout of Panama. Then in 1982, they bailed out Mexico, Brazil and Argentina. Then they bailed out Poland. In the 1990s the United States indirectly bailed out the Soviet Union. The purpose of all of these bailouts was to protect the bad loans that US banks made, and to pass their losses on to the taxpayers.
So, let me get this straight. The banks get to keep the profits from the good loans they make, but get to dump the losses from their bad loans onto the taxpayers.
That's correct. Pretty sweet deal, isn't it?
But then, doesn't that give the banks an incentive to make more risky, and therefore, more profitable loans, if they know that the taxpayers will cover their losses?
Yes, and therein lies the crux of the problem. The bailouts are getting larger and larger because the banks are taking more and more risks. And now that Congress has passed that too big to fail legislation, no large company will be allowed to fail regardless of how much risk they take. And who will pay for it?
Let me take a guess. It will be the taxpayers. I'll bet that the next time this happens it will be so large that it will bankrupt our entire country.
Then you may be right. Secession by the conservative states may be the only answer.
I hope you enjoyed this video. Our next video will deal with how the Fed creates money. Please stay tuned. And, please visit our website on secession. It covers the right to secede, the reasons for secession and what the new government will look like. Please tell your friends. We need to act now.